Join us to get exclusive and rare access to some of the industry's best leaders. Leaders who will share all their secrets to success with you. Leaders who have closed thousands of successful deals between them, generating hundreds of billions of dollars. And leaders giving you the roadmap to fast track your career and reach the highest echelons of the business. So welcome to the Investment Banking Leaders Podcast and best of luck on your growth journey. We have another top guest for you all today. I'm super excited to be joined by David Koch, Managing Director, Head of ECM, and the Co-Head of Capital Markets at Brown Gibbons Lang in New York. David is a seasoned investment banking professional and a true equity capital markets heavyweight. He started his career at Lehman in New York back in 2001 in M&A, before switching his focus to ECM full-time in 2002. And during his 6-year career at Lehman, David made the move to London and moved to Nomura after Lehman's downfall. And in 2009, as a VP, David was hired by Barclays to grow their European presence and moved up to run ECM in Southern Europe. Here, David had a significant impact, grew the firm, and was promoted to MD back in 2015. After that, David made the move to GP Bullhound in 2021 as the head of ECM, and there he applied his unique capital formation approach to succeed. And after learning and a good growth phase there, David made the move over to Brown Gibbons Lang in 2023 to set up their ECM platform. David's energy, his passion, and his desire to build something special, coupled with BGL's ambitious growth plans, has made a great match, and they're positioning themselves to capture market share at a rapid rate. So exciting times over there. And having gotten to know David, he is enthusiastic about taking charge of your career by reflecting and learning at every opportunity. He believes in hiring great people, empowering his team, and building a unique culture, and above all, being excited about what you do. So I'm pumped to get in today's discussion. Welcome to the Investment Banking Leaders Podcast, David. Thanks for joining us.
Thank you very much, Peter. Yeah, thanks, Peter. Appreciate it. It's quite an introduction.
Always do my best. So why don't you just start with introducing Brown Gibbons Lang and what you do for your clients?
Yeah, I appreciate that. So we, Brown Gibbons Lang, BGL, are a middle market full service investment bank headquartered in the United States. And what I do is, as you mentioned, capital markets. I head the capital markets group. I focus on the equity side of capital markets primarily, and in particular, capital formation. If you think about a company's life cycle from startup all the way through to some sort of exit strategy, whether it be in the public markets or being sold, there's a number of different steps through that life cycle where capital is required. What I like to do at BGL is capital formation across the entire spectrum. It's really a model that I developed over my career in capital markets, and just thinking about the evolution of capital and the buy side effectively, and how to best service our clients with their objectives in mind.
Amazing. I know you're a true expert in that space, so exciting times for you and BGL ahead, which is great. So thanks for sharing. And why don't you tell the listeners something interesting or unknown about you, just to get us going?
I love it. I don't know how interesting or unknown, but I am a black belt in Taekwondo. Okay. I was always interested in martial arts, but I was playing more traditional sports growing up, soccer, lacrosse, etc. I really wanted to continue to play soccer, but I tore my hamstring in college my freshman year. And coming out of that injury, I said, I'm not going to play soccer. And so jumped on my interest in martial arts, ended up the team at my university and being an instructor. Went through a few ranks of black belt.
So know your finance and don't mess around with you either. Nice to know.
Yeah.
Cool. Thanks for sharing that. And why don't we dive into the career, get into the meat of today's discussion? So super interesting. Having been at Lehman when it collapsed, what did you learn?
Oh, that was a crazy time. I joined Lehman Brothers, as you mentioned, in the early 2000s. It was right around the tech bubble bursting, and then spent a few years in New York before moving to London. So when Lehman went bankrupt, I was in London, and Lehman was separated in terms of through the bankruptcy and in the acquisition process. Barclays obviously purchased the U.S. business, and then Nomura purchased the Asian businesses. I think from a learning experience, the first major point that I learned was that you really need to pay attention to the firm that you're working with and the leadership and the strategy, and not just what they're saying and what your individual businesses within the investment bank is doing, but also the bigger picture, what the overall group is doing. As you start out in your career, people tend to get just excited about being in investment banking, excited to learn, and don't really think about the bigger picture. So just paying attention to what's happening was a big lesson. I was a junior VP when Lehman went bankrupt. That was the first point. And then the second point was brand recognition. I hadn't really thought about this as much until then, but I learned through just the fact that we were running a transaction at the time as lead left or joint global coordinator, however you want to think about it, as Lehman Brothers, and then Lehman went bankrupt. And then sort of weeks later, we were Nomura. We were the same people, and the client didn't recognize our capabilities to continue to lead the transaction, despite the fact that we were the exact same team. We did still work on the deal as a firm, but it was a real lesson in how important brand is and brand recognition is in investment banking.
That's super interesting. I guess it's really easy to get sucked in a big organization and not really pay attention, as you say, to what's going on across the whole group or the firm wide. So super important lesson there. And brand recognition, same people on the deal, but obviously pushed further down the line. So that's an interesting take. And let's talk a bit about that. Off that learning, how have you built personal and professional brand recognition in your career?
Look, recognition is critical for an investment bank to get right. A lot of firms develop their brand within a specific product or a specific sector or market. And over time, you get to be known for that product, sector, market, et cetera. And your brand gets pegged to that. Getting out of that mold is not easy, but it is something that certainly can be done and happens often, because ultimately the drivers of the brand are the people that the firm and the institution has there, and people come and go, people change roles and responsibilities. And while the brand itself remains constant in terms of the nomenclature, what the underlying drivers of that brand can shift and change. If you put yourself in client shoes, you typically hire an investment bank at a pivotal moment in your company's life cycle. You're raising some sort of strategic initiative. You're going to do a transaction, an M&A deal, you're raising capital, you may be going public, which is probably the most transformational thing a company can do. And at that point, you typically have a governance structure that requires a board, and there's a lot of weight that gets put on a brand of the advisor that you hire for that transaction. The last thing that you as a CEO or board want to do is have a transaction that isn't successful. And a lot of times the legacy, the history of the firm that gets hired is one of the most important aspects of why that firm gets hired. Companies will get comfortable hiring a specific bank because they know that bank is a good, safe bet from a brand perspective. That is a key aspect of our business. It's also a pitfall because from my experience, and you can see this all over the street, people move. And while the brand stays the same, the quality of the people within firms changes. And the people who run deals, the individual bankers, are extremely critical to the success of any given transaction. So you might feel comfortable hiring a certain bank because of their name and their reputation. But then if the key bankers there that have created that brand and reputation move on in that specific product or sector or market, move on to a different firm, that there may be a disconnect between brand and the quality of service you receive as a bank. So that's a little bit about how I see brand importance in the investment banking industry. I think you can make material step changes as a firm when you grow by hiring the right people, aligning culture. That's a really key point around it, making sure that you've got people rowing in the same direction, but also creating an environment that allows for diverse opinions and people to feel comfortable when they don't think something is working well. That's critical.
So building that loop for people to speak up, is that what you're referring to?
Absolutely, yeah, absolutely. And I would say that just to round out your questions, bouncing around a little bit on the brand point, but in terms of my own personal brand recognition, I think everybody has that's different. And there's not, I don't think, a specific formula. There's definitely characteristics that are required to make it through investment banking. And to be successful. But I think hard work is clearly an aspect of investment banking that is not underappreciated, but also a little bit of luck. And for me, luck is really, there's a Seneca once said that luck is when preparation meets opportunity. And I do think that is part of anyone's career path, is when those opportunities do come, being ready for them and taking advantage of them.
Nice. Well, thanks for sharing that. I know you're building that brand in the ECM area over at BGL, so we wish you continued luck in that space. We talked about your transition, starting working in New York, moving over to Europe, back in New York now, so you've got a lot more knowledge than most. So what did you learn from working both in the US and in Europe?
That's another great question. I have had the good fortune of spending time in all of the different regions you mentioned. Again, my experience is product based, so slightly different spin than if you were an industry banker. But some of the benefits include product experience, learning how to raise capital, for example, in different markets was very valuable to me. There are very distinct differences, for example, in Europe versus the US. That's in terms of just a company that's public that wants to raise capital. Rights offerings, for example, are very prevalent in Europe, whereas in the US, they're non-existent as a publicly traded company for the most part. Also, cultural aspects of working in different regions, understanding how to do business in different areas, whether it be when I was in London, working in the UK, or working within Europe in different cities and countries within Europe, and also the Middle East. We covered the Middle East from Europe, so spending time out there and just getting a more global understanding of how business is done is what is very valuable. I would say that also, going back to more of a product specific, in capital markets, you tend to, in the US, get very specific and focused as you become more senior. In Europe, there's this benefit of working across industries as a product expert. I was having a lot of responsibility and flexibility around looking at different companies, working in different industries, doing deals in different types of products, so private deals, public deals, crossovers, these types of things. And that was a benefit to where I am today and how I evolved my thinking around my career and what would be a successful capital markets franchise.
It's amazing. I can see why that exposure across more, well, cultures, as you say, but also across the products and the learnings there can really stand you in good stead for a growth phase and obviously what you're doing now. Coming out of a US market, suddenly being in Europe, it can't have been easy. How did you manage that transition successfully?
It didn't happen fast. It required a lot of reflection and thinking about what was important in my career going forward and what would make sense for me to feel fulfilled in what I was doing. And part of it was also timing. Again, going back to the luck point a little bit, taking advantage of opportunities. And when I felt 20 years into investment banking, I felt like I needed to change. Listening to that happened to so be that voice in my head talking about change was just before actually when COVID hit. And it was then all of a sudden I had this very available reflection period because of COVID. Everyone went through their own process, but I'd already started thinking, I'm not sure if this is what I want to continue to do. What would make me happy? What would make me fulfilled going in the next stage of my career? When COVID hit, it really allowed me to hone in on that. And I spent some time thinking about what the next steps should look like if I wanted to continue in investment banking. And that was the key for me, was spending time listening to myself, reflecting on my experience, and coming up with an answer. But again, it wasn't immediate, and it took a couple iterations to get right.
And are there things that you recommend for the listeners to make a transition? We probably have listeners maybe in the US that are thinking about taking an opportunity in Europe or another region, and maybe listeners in Europe as well. We listen to in about 80 countries now, believe it or not. So
Oh, wow.
any tips or recommendations for making that transition smooth?
I would say go for it. This business evolves. The world is evolving continually through different factors. There are so many different opportunities that allow a person to be fulfilled in their career. If you feel like there is something that you're not getting out of what you're doing, there's going to be a way to get it in a different position, in a different role, in a different country, perhaps. Just go for it. Plan, definitely plan. Think about it. Think about what would be the keys to success for you as a person in your career, but don't get too held up on being too comfortable in your spot, because that's really one of the major pitfalls as you get more senior. It's you're just comfortable doing what you're doing, and you've been a managing director for 5, 10, whatever it is, years, and you're doing the same thing, and it's easy. But if you're not happy, or you're not fulfilled with that, and you want to do something different or do the same thing but in a different way, you can probably find that if you spend some time, look around, and plan.
Get out of the comfort zone, I think, is the message
Get out
there,
of the
which
zone.
is never a bad one. I can certainly relate to that.
But it's not easy.
No, I can appreciate that. And I guess now being back in the US, do you feel you have an advantage working in the US market, knowing that you've had all these experiences abroad? Does it give you an edge in any way?
I think it does. Again, I think for specifically around the product experience, and also having had now done hundreds and hundreds of deals in all sorts of different industries, it allows me to run a business that is a full service investment bank, focus across all industries from a product perspective. And so I can spend some time working with our consumer team, with our industrials team, with our tech team, et cetera. And I've done enough transactions in all of these industries to understand the key fundamental drivers of the businesses, and also how the market looks at things, and in those specific industries, because it's very different. The KPIs for a tech company are very different than the KPIs for an industrial distribution business, and also where the market is going to be focused. So where appetite is within those industries. So I think that's important. I think the cross-border aspect is equally important. Businesses are more and more global all the time, and global opportunities from a U.S. perspective can be cross-border, Canada, U.S., or Mexico, U.S. It can be transatlantic. It can be Latin America, U.S. The U.S. has a key position in finance globally. It's because of the liquidity that is generated in the U.S. It's the most liquid market in the world, and therefore allows for companies that are in smaller countries or areas where there's less liquid concentration of capital to look at the U.S. as a place to go and build businesses and have more opportunity to build those businesses. So just understanding that, knowing what's out there, knowing how to be able to capitalize on that, I think is very helpful for me and my business.
It makes a lot of sense. I can understand. It's like more tools in the toolbox, right? You understand so much of the product, so much of the different industries, and of course, cross-border transactions. If you've had that
Correct.
experience, it must make it easier. From your position, unique having you on as a guest today. You've built the Southern ECM arm, as we said, back at
Right.
Barclays. You then pushed the GP Bullhound and built out the ECM, and now you're doing it for a third time. So much expertise and skills there, and learnings, I'm sure, as well. So what did you learn from building out several successful ECM teams and businesses?
Yeah, no, that's a great question. And again, this also sits in a little bit in the luck and opportunity camp for me, where I was just put in positions where I was able to take advantage of the situation that I was in. For example, when I started my career, Lehman Brothers was very well known as a fixed income house, and was really trying to break into the equity markets. It wasn't something that I was obviously, as a first year analyst, driving strategy, but upon reflection, I learned how the senior leaders at that time were driving that strategy forward to break in and become as much of an important firm within equities that they were within fixed income. So that was a key lesson, and how that was driven through just hiring quality people, spending a lot of time and focus on the product through marketing, and really pushing that agenda forward. If you want to break into a new market, you've got to really energize the group and spend a lot of effort and energy in it. And then I think the next big opportunity I had in my career was after Lehman, after spending a little bit of time in Nomura, I moved to Barclays, but I stayed in Europe. Barclays, surprisingly to some people, didn't have a built out full service investment banking presence, and they were building that organically. One of the major businesses that Barclays did not have was equity capital markets, or equities. And so it was really a start from scratch. And there were a few of us, I was only a VP, but I was still put in charge of a region at the time that started that journey and worked with just all together to figure out how are we going to start to win market share in a business that we have not done before. And I remember there were headlines in like the FT at the time saying, not another investment bank, here we go again, kind of situations and stuff like that. But there were a lot of lessons learned about, okay, we're nowhere, we have no league tables. What do we do? Again, it was a lot of thinking creatively, picking our battles, focusing on key areas where we could win with the people we had, and then expanding on that. And over time, we were able to succeed whilst in the time I was at Barclays to make Barclays a top investment bank in Europe as well. So that was a really important lesson. That coincided also with my personal journey, where at the end of my career at Barclays, I was thinking about what was going to make me fulfilled in my career. And I was doing a lot of soul searching. I decided that I wanted to build a business. I wanted to create an equity capital markets or a capital markets business based on all of my experience. I saw things that were working very well, and GP Bullhound gave me that opportunity. And it was a great lesson in how to build a business. As joining a firm that was on a growth cycle, very specific, very neat in terms of sector, which has its advantages, which is the firm, the tech merchant bank, and very focused on technology solely. But at the same time, it also has its disadvantages. If a market turns in a specific sector, obviously you get overweight the negative impact of a market going south if that's your key focus. So I learned a lot about how to build an equity capital markets business within a middle market or a smaller firm, and also what worked and what didn't work in terms of that, and also being part of a smaller organization than a megalith like Barclays. That was the first time. And then I rewrote my business plan around a capital markets business, and it happened, the opportunity came knocking to join BGL, and I presented my business plan to the senior management. At the time, BGL did not have an equity capital markets business, did have debt capital markets, and wanted to build a capital markets business that was holistic and focused also on equity. So I presented my business plan. I said, look, we need to think about this and rewrite the script. The market's changed, as I mentioned earlier. Capital has become much more fungible. It started to become fungible when I started my career. I remember seeing the first institutional investors going pre-IPO back in 2002, 2003, et cetera. Over the years, different products like SPACs and other pipes and other products became bigger, really blurring the lines between private capital and public capital. Eventually, private exchanges have started to become a bigger feature. And as markets go through cycles, Wall Street gets creative around how they can in companies. And the structured equity and the structured credit market boom came out of the last downturn, or not came out of it, but really expanded out of the last downturn. The way I presented and my philosophy around capital markets is we need to be able to tackle capital formation across the entire spectrum and not just focus on specific and be very siloed. Capital is now fungible. Investors are seeking alpha across all of the different types of capital, stages of capital. There's constantly new funds popping up here and there. We need to be on top of that. We need to understand how that can be helpful for aligning our client objectives with finding the smartest and the lowest cost of capital for them to succeed. And that was really the thesis and the bench and the core aspect of my business plan for capital markets at BGL. And that's what I've been doing since I joined, is building out this capital formation business along those guidelines.
It's super interesting, your take on capital formation, and again, the way the more creativity, more innovation,
Correct.
working across all the potential that's there versus getting stuck in certain products. So love that, and I'm sure it's going to lead to a lot of success. So best of luck as you continue to build that out.
And by the way, just to say, it's an ever-evolving situation. We're constantly moving at the goalposts. Innovation and creativity are rife in our business. So as the buy side gets creative around how they like to structure deals and their return hurdles and things, we also need to understand how to translate that to give companies that are trying to grow the best chance of success to grow their businesses.
Yeah, sure. And I hear it a lot. It's funny, it comes up a lot about creativity. No matter the industry focus or product group, it comes up a lot, and no wonder why. And I love a lot of your takes. I was looking here. You talked about learning from leaders, hiring quality people, focusing on product marketing, thinking creatively, picking battles. These have all had some key aspects as you've grown one of the three businesses you've been involved in. So a ton of good takeaways there. And we're really into the leadership nitty gritty here. So got a lot of aspiring leaders listening. What advice do you have for them to make it to the top of the investment banking industry?
That's a good question. There's a few different points. One is transparency. I think that is important, to be very transparent with your clients in particular and be honest with them and yourselves around what can be done and what can't be done. Give people an honest take on what the value of the business is, or what it's going to take to get your client from where they are today to their objectives. I think for leaders, failure is part of the journey. I think that's really important, is to embrace your failures and not just see them as negatives, but really opportunities to learn. That's something it took me a while to understand, because in investment banking, you get paid on revenue generation. And if a deal doesn't succeed, it's, oh God. At the same time, you learn so much. And if you don't, you're going to repeat that failure again and again. I think there's probably some other characteristics that it takes from a career perspective. I think having a mentor is the very important part of your career development. It's something I wish I had done earlier on. I had a great mentor in my sort of second half of my career that I really learned a lot from. I would say get a mentor early and have multiple mentors. Have one for a few years, move on to a different one, and equally learn from your bosses as you go through your career. You're going to start as an analyst. You're going to move through the ranks. Typically, the cycles are 3 years. Maybe it's 2 for somebody who's moving fast in one period, but ultimately you've got 12 years or so, maybe a little bit less, depending on your trajectory, where you're going to have bosses throughout, different bosses. Some of them you're going to like their style, some of them you're not. Appreciate all the styles, learn the ones you do like, the ones you don't, learn and help cultivate your own style. I think that's a really important message to create ultimately how you are going to lead as a leader, because there's not an exact formula. And then I think if you are a leader and you're running a team, running a desk, for me, the key characteristics would be, I mentioned trustworthiness, I mentioned transparency, ownership and accountability are really important. I think accountability is something that gets overlooked sometimes. People are afraid to take ownership of a failure and point the fingers. And a lot of times, if you're doing things right, it is not a single person, and it's usually a team effort to win a deal. And it's not just one person who's created the failure. But what's important is, again, going back to the accountability and learning from that mistake. Definitely drive and determination. You have to have those characteristics in investment banking. And then I would say the other points for me, from my experience, teamwork and competitiveness. I think teamwork is absolutely critical to success. It's an extremely competitive environment in any area of the market that you work. There's a lot of banks that do the same thing. And so that kind of feeds into creativity, but also the teamwork part of it is really important. A group together that makes sense to win a particular deal or to service a client, and using all the tools within the group is critical. To want to win is also critical. You got to know that everybody out there is looking to beat you at winning a deal. And you've got to use that to drive the thought process and development around how you think about winning business, so that you always come up with the best options for that client, because somebody is out there thinking the exact same thing that you're thinking. So you've got to be aware of that. So I covered a lot there, but that's a bit of how I think about things.
Ton of great stuff. I love it. Transparency with the client, be honest about what can and can't be done, build that trust that you need to become that trusted advisor status. Failure, part of the journey, embrace it. We all have it, and there's a lot of it obviously in the industry, right? So the mentor comes up a lot as well, but completely makes sense. And I couldn't agree more. I only got into the mentorship angle later in my career, and like you, wish I'd done it a lot sooner. And I think sometimes it's just asking. You'll be surprised if you ask what you can get. So I think that's a key part of it. Don't let that hold you back. Learning from leaders, cultivating your own style. So yeah, and ownership and accountability. Again, I couldn't agree more. I remember chatting to you about how you build transparency within your team, and you like your team to ask you the tough questions. You got any advice in that area? I'm sure there's leaders listening today that would love to hear and learn more about that.
Yeah, I think that there's different ways to do it. Building a business, it starts with having a great team. And so I think about the hiring part of it as a really key part of building a business. And whether it's a business from scratch or it's a business that you take charge of. Having the people really are driving that. One of the characteristics around management, I would say, that's important is flexibility. Understanding that people work at different paces, people have different working styles, and understanding those styles, understanding those paces will only create efficiency within the group. And so what I like to do is when I first hire somebody, or if I'm taking on a new team or a new business, is over communicate. Spend, instead of doing review cycles that are either half yearly or yearly, even sit down with each individual team member once a month for the first 6 months, for example, and just chat. How are things going? Here's what's going well, in my opinion. Here's what's going well. Tell me what's going well in your opinion. Here's what's not going well, in my opinion. And that also allows people to pivot and understand if there is a performance issue, to get in front of it before it becomes an actual performance issue. So I think that's really important, is being flexible and adaptable to people's work styles, not trying to force everyone to conform. I grew up in a culture where it was very conformed. And that was just the way it was back in the early 2000s. And I was at my desk at 7 a.m. and I was there at least until my boss left, but until, usually as a first year analyst, you don't leave before midnight because you don't want to be seen as not working hard. Guess what? That's not a very efficient way, surprise, to get the most out of your people, and it creates a lot of burnout. So our business intrinsically requires long hours. That is never going to change because it's very competitive and the margins are good if you succeed. This is a business that requires long hours and to work hard, and you have to sign up knowing that. If you don't know that signing up, then investment banking may not be for you. But everyone has their own time and style to work. So for me, a benchmark is more about product quality and timeliness of product, as opposed to whether or not people are spending more or less time in the office and when they're spending that time in the office. And then I think, really, like I said at the beginning, creating an environment where diversity of views and perspectives, and where people do not feel afraid to share when they think things are not going well, and to share also when things are going well, of course. And I think that's really important, because if everyone's telling you things are going great, it may be the case, but it also may be that people are afraid to speak up. So that's important. That takes some time. But again, it all comes down and boils down to making sure you got the right people that you're working with.
Yeah, I like that. Loads of good feedback there. Getting the right people on the bus. I'm a big believer of that. And as you say, the flexibility, it's changed quite a lot since those early 2000s in many good ways. I like your approach to over communicate, spend more time with people, gives you that ability to get to know each other, to build that trust that is important for real feedback as well as just the good feedback. And as you say, get ahead of potential performance issues. So a lot of great stuff there, David. Thanks for sharing your insight. And why don't we talk a bit about opportunities and challenges then? A young leader today or aspiring leader, what do you see as the biggest opportunities for them within the investment banking industry?
I would say, in the vein of what I was mentioning earlier around the constant change that we are around our industry, embracing that change is really critical. Technology is playing a more and more prominent role how we do our business. This is a people business, investment banking. Having that trusted advisor relationship with your client is critical to winning mandates. Technology is now at a point where we can take advantage of it as leaders to create efficiencies, not have the junior bankers get deflated because they're constantly doing extremely mundane tasks. And that used to be part of the path, as you got to suck it up. When I was an analyst, you were the one running to the printers and sitting there all night, as like literally at the printers, physically at a printing facility, and constantly documents were getting corrupted, and you'd have to rewrite the document because the file got corrupted. There were things that were happening that were just insane. But now we have, and I'm going to sound a little bit trite, but AI is a game changer. It's a game changer not just for investment banking, but for every industry. Now, how do you utilize that to maximize efficiency and within your team? I think is something that leaders in our industry, the more you embrace that, the better you're going to succeed in winning business and also retaining very good talent in your teams and through the their career.
Super interesting, isn't it? Because we know it's one of the big challenge attracting and retaining talent for the industry. And if you can find ways to cut out that mundane work that doesn't light people
100%.
up, you're going to be in a better situation as a leader. And I guess you're right, embrace the change and really try to understand how the technology can impact your team. Thanks for sharing that. What about on the challenges side? Any specific challenges leaders face?
I'd say it's just the inverse. If you get stuck in your own ways and you think this is the only way to do things because it's worked in the past, that may be a longer term strategy to failure if you're not willing to embrace the changes. There's a balance here, which I want to be very careful that I draw. The trusted advisor relationship that you have with your clients is the most sacred thing that you can develop in investment banking. Succeed together and the client will continue to give you business. And if you're doing things right, we don't fix something that's broken. But at the same time, if you can do things even better, then be open to that. And I think that's a challenge because you want to get that balance right. You don't want to just change everything because all of a sudden you've got AI and you can screen for companies and KPIs and stuff much faster than before. And that means that new opportunities look like they're better than these opportunities. But at the same time, you also want to understand that technology and be able to utilize it so that you can just make your client more successful.
And just out of interest, because of course I'm super interested in AI and I'm looking at it, and I wondered, are you doing certain things to help build your knowledge of it?
Yes. Yeah, it's early days, but we are, as a firm, definitely the tools that are available and beta testing them to try to figure out ways to be more efficient. I think it's really about efficiency, making sure that information is shared in a timely manner, understanding, if I'm meeting with a specific client, a colleague of mine is, how all of that information that's been generated from interactions with that client can be utilized in a better way. So I think that's really how, at the moment, I is working in investment banking. Obviously, there's different use cases for trading and research, but I'm specifically focusing on that comment on traditional investment banking.
Thanks for sharing. I think recognition gets a bit of a tough rap in the investment banking industry, how teams are recognized. So having built successful teams and building a new one now, how do you recognize success within your teams?
Simply put, proactiveness and going above and beyond. That's where I really see a difference because everyone's got their roles. But when people start to move out of that role and are proactive around a deal and just say, for example, I know we're talking about this, but I think this client could also in this, without you prompting them, that for me is a game changer in that person's progress and development in their career. That's a key point for me.
And how do you recognize those people? Do you actively take a role in mentoring them? Is it just kind word in the ear? Is it something else?
I think you've got to be transparent about what is going to drive the recognition in terms of their career path and moving forward. It's about moving forward in your career through promotion. It's also about bonus and what you're going to get paid at year end. Those are key recognition factors, but also checking in and making sure that people are feeling fulfilled in what they're doing, enjoying what they're doing, and if not, how it could be better.
Makes sense. Okay, believe it or not, we're coming towards the end. Guess a couple of questions to get you looking back a little bit more, and then one maybe to look forward. So if you had your time again, if you could go back and speak to your younger self in the early part of your career, what piece of advice would you give yourself now?
That's a good question. I wouldn't have changed anything. I would just say get a mentor earlier. I think that would have been a useful piece of advice. I learned a lot from my mentor. The wisdom that I gained has helped me mold my career in a way that it would have taken longer to get to if I had done that.
For sure. I hope that's taken on board by others and definitely appreciate that. And I guess thinking about what else has helped you grow, Mentor obviously has had a huge impact.
Yeah.
But are there books, podcasts, other materials that you recommend that have had a big impact on you in your career?
Yes. I was actually just thinking about that as you mentioned it. For me, there's a book by Steve Schwartzman for Blackstone, What It Takes, I think it's called. It was a really eye-opening book for me to hear somebody who created one of the biggest, most important financial institutions of modern times, that journey, and understanding what that journey entailed and what were some of the key points of success and failure going through that journey. And that was a book that had a lot of impact on me and how I thought about what I wanted to do next, how I wanted to drive my career trajectory, and ultimately decided I want to stay in investment banking. I want to build a business in investment banking. And that's where I am today. So that was definitely important for me in that process.
Amazing. Thanks for sharing. I know he's come up a couple of times. I'm not sure which book titles. We'll have to go back through the episodes, but it's good to see another good one being added to the list. And how about we've looked back for a long time, lots of reflection in the last hour or so. Why don't we look forward for a second? What do you see as the outlook for 2025, particularly in the ECM space?
So I would say from a market perspective and just business perspective, it's been a reset. So we had what some people call the Great Reset of 2022, 2023. It was the period when inflation started to creep in to the market for the first time in a very long time. Then you had a lot of different factors like Russia invading the Ukraine and things happen, and the Fed being cut flat-footed on interest rates. And that all slowed down what was probably one of the craziest, most busy periods of investment banking, which were the 2020 and 2019 and into 2021. So that period there, from a volumes perspective, we haven't seen anything like that. Macro uncertainties that we have been witnessing fed through the market, while it's taken longer than expected, are starting to dissipate, and we're starting to see a more normalization of volumes and deal flow, and that's really important. It has to do with where interest rates are, inflation coming down, but also deal conviction, investors being ready to put money back to work, which they are. And so I see the market being open. I see it being open for issuers in the capital markets. Investors are ready to deploy capital across the public markets and the private markets. And what's always great about what comes out of a market cycle is innovation. And there's been a lot of innovation in the last 2 years around how to raise capital, how to monetize. We are very focused on that in my team. We've got a lot of experience and an understanding on how these new innovations can be utilized. I'm excited because I think the more traditional routes are going to be much more available to issuers, but also new innovative ways are also available now. And I'm excited about the markets.
I love that. It's been a tougher 18 months. I delivered the strategy for the Outram team last week. We just moved into our Q2. Our Q1 was September to end of November. Sharing, it feels like we've turned the corner after a tougher period, and now we're going to start to see the climbing back to much more stable levels and levels that you can predict a bit easier. So I love the excitement. Long may it continue. And what a good way to end today's episodes. David, just want to say thank you so much for joining me. I know you're a busy man, so really appreciate you taking the time out to spend with us and the listeners. And also, best of luck for your continued growth at BGL. Exciting times.
Peter, thank you very much. I really appreciated the conversation today, and best of luck with everything you're doing. I think it's wonderful.
Thanks, David. Take care. This episode was brought to you by Outram, the global leaders in the financial deal gift, awards and recognition space. So if you need any assistance in these areas, don't be afraid to hit me or the team up. I really hope you enjoyed today's episode. Thanks for joining us. And until next time, best of luck on your growth journey.